Okay, let's check that. It's because economics focuses on market exchange. So, exchange value is what gets measured in prices and trade. Things with just use value, like air, don't usually enter economic transactions.
That's why value in use only is not an option for this question, isn't it?
Right, exactly. Yeah, value in use alone isn't what economics is dealing with here.
Could you give an example for this question?
Sure, clean air has huge use value, but normally no price. Bottled oxygen has an exchange value because it's sold.
So we can say that in economics we are concerned with exchange value only, not value in use.
Exactly that. Nicely put.
So which of the following statement is true? Option 1. The study of economics ensures that all problems will appropriately tackled. Option B. The study of economics cannot ensure that all problems will be appropriately tackled. Option C. The study of economics does not enable a student to examine a problem in its right perspective. Option D. None of the above.
Hmm. Option B. Economics helps analyze and understand problems, but it doesn't guarantee perfect solutions to every problem. So, yeah, B is the right one.
Could you give an example?
Yeah, economics can help you weigh inflation versus unemployment trade offs, but it can't guarantee the one right answer because real world outcomes depend on data, uncertainty, and human behavior. It's a guide, not a guarantee.
Give example for both option A and B with reasons.
Let me line that up. Option A says economic style ensures all problems are tackled appropriately, which is too strong. For example, policymakers might use sound models to reduce inflation, but end up increasing unemployment. Outcomes can vary. Option B recognizes that, and that's why it's correct.
So business economics is a science or an art or both or none.
Hang on. Both science and art. It's systematic in theory, but practical in application.
So what will be the answer?
Both science and art.
Give an example for both.
Price elasticity is. Let me get you one for each. For science, think of price goes up, demand goes down, measured with data. For art, a phone company uses that rule plus market judgment to set a launch price. Principle plus judgment. That's the art in action.
Dash is concerned with welfare proposition. Your options are normative economics, positive economics, both or none.
Checking. Normative economics. Welfare propositions involve value judgments about what ought to be, not just what is. So yeah, normative.
Example.
For example, saying the government should reduce poverty through higher social spending is a welfare proposition. It's a value judgment about what ought to happen, so it's normative, not positive.
Could you give another example?
The minimum wage should be raised to ensure a living standard. Again, that's a normative statement because it expresses a value judgment about what should be.
Microeconomic theory studies how a free enterprise economy determines option A, the price of the goods, option B, the price of the services, option C, the price of economic resources, option D, all.
One moment. Option D, all of the above. Microeconomics looks at how prices of goods, services, and factor inputs are all set through demand and supply in individual markets. So yeah, D.
Which aspect of taxation involves normative economics? The incidence of tax, or the effect of the tax on incentives to work, or the fairness of the tax, or all of the above?
Hang on. The fairness of the tax. Fairness is a value judgment, so that's normative. Incidence and incentive effects are testable, so they're positive.
When they say incidence, what does it mean?
Who actually bears the real burden of the tax, regardless of who formally pays it? Like a sales tax collected from sellers might mostly be passed on to consumers.
So, economics is a branch of options are natural science, or physical science, or social science, or none, that focused on the production, distribution, and consumption of goods and services.
One sec. Social science. It studies human behavior in producing, distributing, and consuming goods and services. So the correct option is social science.
Is consumption also an economic activity?
Yes, consumption is a core economic activity, along with production and distribution.
To to uh, what a consumption means in economics.
It means using goods and services to satisfy wants. For example, buying and using a phone plan.
But
That's consumption.
what if the consumer does not pay and it directly consumes without paying? Will that be considered as an economic activity?
Okay, good question. If the good or service is an economic one, meaning it uses scarce resources, then consuming it is still consumption, even if someone else pays. But using a free good like air is not an economic activity.
No, let's
So
say
paying
the
isn't the
person.
key,
Let's
scarcity is.
let's say the person is consuming, which was donated to him. What happens in such case? Let's say he was given a certain food for consumption as a donation by someone else.
Yeah, let me check. That's still consumption. The food was produced and provided by someone, which is the economic activity, and when the recipient eats it, that's consumption. Payment and consumption are separate. Even if the recipient didn't pay, they still consumed an economic good, so it remains an economic activity.
Is external value of currency, is it a micro or macro concept?
Checking. Macroeconomics. External value is about exchange rates, which is a macro topic.
Which of the following are within the scope of business economics? Options 1: capital budgeting, risk analysis, business cycle, or all of the above.
One moment. All of the above. Business economics covers capital budgeting decisions, risk analysis, and understanding the business cycle, so the correct option is all of the above.
When they say capital budgeting, what does it mean?
It's deciding whether to invest in long-term projects, like building a new factory or buying machinery by comparing expected returns and costs.
who defined business economics in terms of use of economic analysis in the formulation of business policies?
Let me check. Joel Dean. He described it as the use of economic analysis in the formulation of business policies.
What does it mean? Okay, could you explain with an example as well?
Sure. Yeah, it means applying economic tools to make business decisions. For example, using demand analysis to set a price, or using cost analysis to decide whether or not to expand production.
Is business economics more normative or pragmatic?
Hang on. More pragmatic. It uses both positive and normative ideas, but the emphasis is on practical decision making.
Now, business economics is normative or pragmatic as per ICAI?
Checking. Pragmatic. It focuses on applying economic principles to real business decisions. For example, using demand and cost analysis to decide whether or not to launch a new product. That's pragmatic application. ICAI presents it as an applied, decision-oriented subject.
What is the nature of it then?
Applied and practical. It's decision-oriented, using economic theory to solve real business problems.
As per my book, it's written as it's more normative or prescriptive in nature. It suggests the application of the economic principles with regard to policy formulation, decision making, and future planning. However, if the firms are to establish valid decision rules, they must thoroughly understand their environment. This requires the study of positive or descriptive economic theory. Thus, business economics combines the essentials normative and positive economic theory, the emphasis being more on the former than the latter. So, I have concluded that it's a it's a normative in nature more.
Alright, let me double check that frankly. Your ICAI text is right. ICAI presents business economics as more normative or prescriptive in nature because it recommends what businesses should do. It also uses positive analysis to understand facts first, but leans normative for decision rules. So, for exam purposes, go with more normative, combined with positive.
So, in a market economy, resource allocation is primarily determined by option A, central planning by the government, option B, consumer demand and supply in the marketplace, option C, the decisions of a few large corporations, or option D, international trade agreements.
Checking. Option B. Consumer demand and supply in the marketplace. Prices guide resources.
The concept of business economics was given by whom? Joel Dean, Alfred Marshall, Adam Smith, or Lionel Robbins?
One moment. Joel Dean. He introduced and defined the concept of business economics.
Means he is the first who introduced. Is it so?
Let me just verify. Yeah, for your exam, that's the idea. Joel Dean is credited with introducing and defining business economics as a separate applied field.
What's his nationality?
One moment. If you mean Joel Dean, he was an American economist.
My next question is which of the following matters is or are fundamentally connected to the economic analysis? Your options are economic prosperity or higher standard of living or changes in price of a commodity or all of the above.
Checking. All of the above. Economic analysis deals with prosperity, living standards, and price changes.
How the first option and the second option are differ?
Let me clarify that. Economic prosperity is about the country's overall growth and development. A higher standard of living is about individuals' quality of life and comforts. They're connected, but not the same.
Fundamentally connected. Fundamentally connected.
One moment. Got it. The correct word is fundamentally, pronounced fundamentally. It means essentially or at the core.
Okay,
So
and my next
matters
question is
fundamentally connected.
positive economics means option A does not depend on market interactions. Option B only looks at the best parts of the economy. Option C examines how the economy works as opposed to how it should work. Option D is very subjective.
Option C. Positive economics is fact-based. It explains what is, not what ought to be. For example, if price rises, demand falls.
So microeconomics deals primarily with options are comparative statics, general equilibrium and positive economics, or comparative statics, partial equilibrium and normative economics. Option C, dynamics, partial equilibrium and positive economics. Option D, cop- cop- comparative statics, partial equilibrium and positive economics.
Chicken. Option D. Comparative statics, partial equilibrium, and positive economics. That's the standard characterization.
Could you explain it word by word? What does it mean?
One moment. Sure, word by word. Comparative statics means comparing one equilibrium to another after a change, like before and after a price change. Partial equilibrium means focusing on one market at a time, assuming others are unchanged. Positive means fact-based, how things actually are, not what we want. So microeconomics often uses partial equilibrium and comparative statics to describe real outcomes. That's the positive part. Does that make sense?
How microeconomics deals with a positive economics? Could you give an example of it?
Sure. So, for instance, microeconomics looks at how a price increase on, say, milk can lead consumers to maybe buy less milk or switch to alternatives. That's positive analysis. It's testable and descriptive. No value judgment, just cause and effect. So, we're not saying this is good or this is bad, just this is what happens.
So micro does not deal with normative science or what?
Just a sec. Not mainly. Micro is primarily positive, but it can be used in normative analysis too. So for your exam framing, microeconomics mainly deals with positive economics.
When they say that business economics, whether it's an abstract or not, what does the abstract word means here? Could you explain?
Let's have a look. Abstract here means theoretical. So it's asking whether business economics is just theories and concepts or something more practical. Business economics is less abstract because it applies theory to real business decisions, whereas pure economics is more abstract.
So, when we study only economics, it's more abstract, isn't it? And when we study business economics,
Yes.
it's not that much abstract. It's kind of pragmatic in nature. Is that what this all about?
Exactly that. Yes, pure theory is more abstract. Business economics is more applied, problem-solving focused. For the exam, think economics is more abstract, business economics is more practical, pragmatic.
When we say microeconomics deals with partial equilibrium, what does it mean? Give an example as well.
Let me check. That means studying one market at a time, assuming other markets stay the same. For example, analyzing the market for coffee by itself, looking at how the price of coffee affects demand and supply for coffee, while not worrying about everything else in the economy changing all at the same time. So just one slice instead of the whole pie.
Why is it named as partial equilibrium then?
Checking. It's called partial because it looks at equilibrium in just one part, only one part of the economy, one market, not all markets together. So partial literally means not the whole.
And what about the comparative statics?
One moment. That means comparing one equilibrium position to another after some change. It doesn't study the adjustment process in between, just the before and after. For example, compare the equilibrium price and quantity of, say, notebooks now versus after a rise in production cost. That's a comparative statics question. So it's not the day-by-day adjustment, just the before and after.
And what about the positive economics? In this context,
So that's fact-based. Right. In this context, it's still fact-based analysis of what actually happens in the market. So not value judgments. For instance, if we say, if the price of rice increases, then the quantity demanded will decrease. That's positive. But saying the government should control rice prices, that's normative. So again, for your exam, micro focuses mainly on positive.
So normative economics is also known as prescriptive economics, isn't it? As it prescribes.
Let's check. Yes, exactly. Normative is prescriptive, i.e. what ought to be. Well, positive is descriptive, what is. That pairing is handy to remember.
There's a question. Normative economics is also known as. Your options are prescriptive, positive, applied, or none.
Prescriptive. Positive is a different thing. Applied is not the standard term here. None is not right.
The question bank has given D for this question. Is it a mistake from the question bank?
One moment. It sounds like a mistake. Standard terminology is clear. Normative equals prescriptive, so if D is none, that's wrong. It should be prescriptive. So that's option A.
If normative is prescriptive, then what positive will be?
Descriptive. Positive equals descriptive, normative equals prescriptive.
A prescriptive means suggestion, is it so?
Let me check. Yes. Prescriptive in this context means it recommends or suggests what ought to be done. So normative or prescriptive statements say what should happen, which is basically a suggestion.
Which of the following refers to the study of the total or aggregate level of output, income, employment, consumptions, investment, and prices for the economy viewed as a whole? Options are managerial economics, option B, microeconomics, C, macroeconomics, or D, econometrics.
Let me check. That's macroeconomics. Macroeconomics. It studies the economy as a whole. Total
Could you
output,
explain what is the
income,
meaning of
employment,
what is the
and-
meaning of econometrics?
One sec. Econometrics is the use of statistical and mathematical methods to test economic theories, analyze data, and quantify relationships. Think of it like applying statistics to economics. For example, using data to estimate how much demand changes when price changes.
Which of the following is not dealt with in microeconomics? Options are the effect of agricultural subsidies on the price of milk. Option B, difference between market for skilled labor versus the market for unskilled labor. Option C, issues related to the structure and performance of the healthcare sector. Option D, policies that affect the level of aggregate consumption.
One moment. Option D, policies affecting the level of aggregate consumption is macro, not micro. The other options focus on
Which of the
individual
following
markets or sectors,
areas
so they're
which of the
micro.
following areas of study refers to the application of economic theory and the tools of analysis of decision science to examine how an organization can achieve its aim or objectives most efficiently? Options are business economics, microeconomics, macroeconomics, or econometrics.
Check in. That's business economics. The application of economic theory and decision tools to achieve the firm's objectives most efficiently.